As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have an important returning guest today, Jason Burack, co-founder of WallStreetFromMainStreet.com. He's an investor, he's a contrarian economist, a co-founder of the startup educational and financial company Wall Street for Main Street, whose mission is to try to help the people of Main Street by teaching them the knowledge, skills, research methods, and investing expertise of Wall Street. Jason, welcome back, and thank you for joining us again here on Reluctant Preppers.
My pleasure, DK. I'm glad to be back.
I'd like to have you talk with us a little bit tonight, bring it very personally. You guys study global trends in all kinds of industries, markets, and give people advice and insight into what's going on. And we will tap that at the end. But I'd like, if you could, for the first half of this interview, if you could bring it down to the personal, individual household. In other words, where economic distress or economic collapse hits home. And if you could start out by telling us where you think people have already been affected, even though they may not fully realize it, by stresses and strains in the economic system. And then in the second half, we'll talk about what you think are some realistic scenarios going forward of potential further economic collapse or decline, and how those might play out specifically, and very specifically on individual families' finances. So if you could start us out with telling us what's been going on and how it's been affecting people's finances directly and in very specific ways.
Sure. Well, I think what has been happening for a very long time, DK, is that there's been worsening stagflation, and the people on Main Street are the ones getting hit the most. So the middle class are the ones that have been they're the detriment of what's been going on. The elites, the people in Washington, D.C., the people in Wall Street, they are the beneficiaries of this large wealth transfer that's been going on for many decades. And in terms of what people, the definition of stagflation for your listeners who are not familiar, that is high inflation plus high unemployment or underemployment. So what we have now, if you're on Main Street, and what I get from my listeners, we have over 2 million views now on the Wall Street for Main Street podcast. We've just gone over 2 million on our YouTube channel. When I talk to small business owners who listen to our podcast, ask them how their business is doing or how the economy is doing, a lot of them are not doing well. They're worried about expanding their business. They're worried about hiring full-time employees. If they are hiring, it's mostly part-time employees. So a lot of people on Main Street, DK, they are looking for high-paying full-time jobs. And for the most part, those jobs, especially if you're in the U.S., they are just not there. And this is while the asset prices just keep going higher and higher and higher. They're defying gravity. What's really going on in the real economy, though, is we see these government statistics come out and saying, oh, retail and restaurants are creating jobs. Oh, really? Look at Ruby Tuesdays. They just fired a bunch of employees. Wendy's fired a bunch of employees. Ruby Tuesdays is closing a bunch of stores. There's so many other restaurants that are shutting down or in trouble. There's entire television shows about this, whether it's Bar Rescue or Restaurant Impossible, of lots of people shows who restaurants who are in financial trouble. And yet the government statistics are saying that's where all the jobs are creating. Same thing with retail. Look at all the retail stores that are closing. A lot of them now were in states where politicians are trying to raise the minimum wage. The stores are announcing that they're going to automation. They're going to either computer touchscreens or automation. So on Main Street, the real economy has not done well. There was no real recovery after 2008. The real recovery, and I'm using air quotes here, was in asset prices. There was not a real recovery on Main Street after 2008. Even before then, things were bad, but things are just getting worse and worse for the people on Main Street. The everyday items they need to survive, so their health care, their food, their rent, utilities, those types of bills, those bills are not falling. So when the government economists go on TV or they issue these fancy reports, or the politicians go on TV, talk about how they need to fight deflation and how bad deflation is, the guy on Main Street is not seeing any of the benefits of deflation. Now, I'm a free market economist, so if you're a Keynesian economist, deflation is bad. But if you're an Austrian economist, deflation is good. That means you're getting more purchasing power, more bang for your buck. So your dollar will go further. You will be able to buy more goods and services with each dollar. That is not really happening for the most part in the economy anymore. That is because the real economy, DK, is not creating as many jobs as it could be, and the purchasing power of fiat currency is being taken away via inflation and wealth transfer. The main street is just being killed for decades now with inflation and taxes. And, the government statistics are not reflecting any of this.
In addition to what you talked about, what about people's savings and retirement incomes?
Well, it's becoming tougher and tougher to find a safe, secure spot for easy retirement incomes. In the past, a decade or two ago, it was a lot easier if you had a nest egg of principal for your savings to find something to invest in to pretty much comfortably retire on. But I would say with the Federal Reserve and other global central banks going to 0% interest rates, and now we have over 12 trillion in negative interest rates, and now we have a private German bank which is actually going negative interest rates on their own customers. So we don't have just negative interest rates on government bonds, which are over 12 trillion. We now have banks talking about negative interest rates on their own customers, which is charging you as a depositor to keep money in the bank when the banks don't even need your money because they're being given free money. We are in theater of the absurd territory, DK. We are in Twilight Zone territory. We are in the perversions, the total extremes of bad academic theory. These guys, Keynesian economics should have died in the 1970s with stagflation. The Phillips curve said that high inflation and high unemployment, which is stagflation, I said earlier in the interview, that cannot occur simultaneously. That's what these Keynesians prided themselves on. Stagflation could not occur, and then it happened. It happened, and it was really bad. And yet, it didn't die. The theory didn't die. It was just adapted. So I think what we have now is we have a bunch of people who really want to retire, but they can't invest their income. They can't invest their savings into it, so they're having to go back to work. So you see this in the job statistics. You see a lot of baby boomers who are already retired or thinking of retiring. They either can't retire or they have to go back to work. And I'm hearing the same thing from our listeners. So the consequences of the policies of these central bankers doing crazy negative interest rates, it's preventing people from retiring. It's preventing people from making sound investments. It's forcing people to take crazy amounts of risk. People have put a lot of money into junk bond funds, pension funds, and other large pools of capital have put ridiculous amounts of money into junk investments, junk debt, just to try to get any type of return. So the unintended consequences that are being caused by the policy of these central bankers, it's going to be felt for decades to come. There's probably going to be some lost generations. My generation, I'm born 1982, so I'm more one of the older millennials or older Generation Xers, whichever one you want to label me as. We're not going to have a lot of the things that the older generations had, where they had more comfortable retirements. They could support a family on one income. They could have a couple kids and still afford vacations and still afford money to invest. That's just not going to happen in the world that we're in today. We're in a world today where the governments routinely lie about how much inflation and taxes they have. And I'm not just talking about the U.S. government. I'm talking about basically every government on planet Earth, that their goal is to just redistribute wealth to either themselves or whichever voting class is giving them the most votes. And it's going to end in a disaster one way or another, but the future is not looking bright, DK, until these things are fixed with the currency, with the amount of corruption in the politicians. Until this is fixed, the government is just too large. There's too many bureaucrats that are preventing entrepreneurs and small businessmen from making sound investments and creating jobs. The recipe for what allowed the U.S. to be a strong economy for so long, that is gone. That is decimated. And, the near future, the next 5, 10, 15 years are going to be rough unless sound policy decisions are fixed and are made. And I don't think we're going to see that for right now. I think, unfortunately, especially with the politicians that are running for office and the people that are making policy decisions at the Federal Reserve and central banks and in Washington, D.C. and in Brussels for our European listeners, the people that are making decisions now, they should not be making decisions. And every time they screw up, it's you and me, the people who are listening on Main Street, we're the ones who get screwed and our lives get worse. And then they get to keep their jobs and they get to make things even worse with even more policy decisions, blaming it on someone else.
So if you could take us now to the present, in this highly charged U.S. presidential race and other political races that are in progress right now, what do you see as the key most likely outcomes of that? What do you see as the winners and losers in that? If you could get specific about particular players and particular outcomes you see.
Sure. Well, I think obviously the mainstream media is totally lying about Trump's popularity. The polls that they put out are just ridiculous. If you see Trump's popularity on social media and other non-mainstream polls, Trump is actually pretty darn close, if not winning in a number of states. So I think the election is going to be very close. I think the elites will do whatever they have to do by using their lamestream media and other cronies that they have captured to try to discredit him and try to prevent people who are going to vote from Trump. Or I don't even like Trump, by the way. I don't like either candidate. But the stuff they're doing to Trump, not that him opening his mouth doesn't hurt himself in a lot of cases, but the way that they're just going after him. I can't remember another candidate ever being attacked this much by the mainstream media. When it was this late in the election. I just can't remember a candidate being attacked this much. But I think, the guy in the Main Street is pretty much going to be screwed regardless of who wins. Even the Libertarian candidate, Gary Johnson, I don't think he's a very good candidate either. I'm probably going to vote for the Libertarian candidate, Gary Johnson, if I vote at all. I don't think Gary Johnson is a good candidate, though. I think, he smokes too much pot, and his stances on a lot of different issues are not libertarian. And I also spoke to him in 2011 at CPAC, and he hadn't even read Economics in One Lesson by Henry Hazlitt. So I don't know. I don't know if you can call him a libertarian or Austrian school economist that much at all. I don't think you can. But you know what? The Libertarian Party really needs campaign funding, and we need legitimate third parties. We need to decentralize power. But Hillary Clinton, is there a more corrupt politician in the history of the United States than Hillary Clinton? I can make a good argument that she's up there with Lyndon Baines Johnson and some of the other political bosses that, took people out, lied and cheat and stolen, and everyone was afraid of. She just has decades of history of so much corruption and lies and felonies. It's just amazing, and no one will prosecute her. The Department of Justice is protecting her now. The mainstream media won't even talk about the Clinton email scandal anymore, or the Clinton Foundation, which is the even larger scandal. So we have Corrine Brown, who was a Democratic congresswoman from Florida, and she only stole $800,000 in her fake charity, and she's facing up to 300 years in prison. Hillary Clinton did the exact same thing as Corrine Brown. Wire fraud, mail fraud, solicitation, so many countless charges all over the globe. My friend Charles Ortel says $100 billion has gone in and out of the Clinton Foundation since 1997, and yet she's being protected. So I think, unfortunately, the elites want Hillary to win this election. I think, as of right now, my opinion is that Hillary is going to squeak out a win. Maybe they'll rig some machines here. It may be close, DK, to the point where it's like Al Gore and George W. Bush, and we have a hanging Chad type scenario. If you go and look at that case further, I think there was voter fraud there, too, in that county in Florida with the hanging Chads to give George W. Bush the win. So I wouldn't be surprised if there's, obviously there's going to be attempts to rig and manipulate the election. They're doing it now with the polls and with what the mainstream media is saying. But I wouldn't be surprised if they managed to rig the election and get Hillary Clinton a small victory so she can eke it out. But she's running TV commercials now during the Olympics talking about how she's going to create millions of jobs, millions of high-paying full-time jobs. Sorry, not just any jobs, high-paying full-time jobs, and millions of them. She doesn't know anything about economics. The people referring stuff to her are Keynesians who screwed this mess up in the first place. They've created asset bubble after asset bubble, credit bubble after credit bubble. I don't trust anything coming out of her mouth. I think she's 100% prevaricator, a full liar. Maybe there are some temporary jobs created, maybe some high-paying full-time jobs for a few years, doing some type of infrastructure project. One of the government economists, Larry Summers, has been talking, DK, about over $2 trillion in infrastructure spending that needs to be done, a program in size and scale much larger than even the New Deal program to get Americans back to work and jobs that way. and also to improve the economy. So that might be an attempt, but remember, in order to get elected in 2008, Obama said pretty much the same thing, and he was talking about all these shovel-ready projects to get elected the first time, and that really didn't happen either. So I think, the election, this has been one of the more vitriolic elections that I've seen in my lifetime. It reminds me, through going back of history, of not only do we have the going back through a historical reference, I see a lot of the 1920s and 30s here with the problems in the economy, and I also see the 1970s stagflation with problems in the economy. So it's a mix of the 1920s and 30s and also the 1970s stagflation with government rules and regulations and bad government programs and politicians and government bureaucrats blaming the private sector for all the problems. But I also see race warfare, class warfare, gender warfare reminiscent of the 1960s and 70s. So I see you throw all these things in the mix, and this is what we have right now. We have an America that is incredibly divided. And I think, the election, there's just so many people that are blinded, that are brainwashed about Hillary Clinton. I've tried to show them the Clinton Cash documentary, even 5 minutes, just to say, if you have an open mind, you'll watch the Clinton Cash documentary to see how much of a hypocrite and a liar she is. And people won't even give me the talk. It was made by this right-wing guy, and he has no track record, and MSNBC or CNN or the New York Times or the Washington Post said that he's a moron. Well, the guy who created the documentary, he has a huge track record actually of proving the truth about things. He actually got Congress busted for insider stock trading, and a bunch of congressmen tried to police that. So this guy, Peter Schweitzer, people are saying, he's a liar and he made all this stuff up and he has no proof about the Clinton Foundation, the lies and the corruption and all the bribes and the slush fund. His track record says otherwise. I think, this election, it's not going to save as many jobs as either candidate is claiming. And I think the real economy is getting a lot worse. Maybe there will be an attempt by the Federal Reserve or other central banks to do some type of massive stimulus program. Japan has talked about helicopter money. They didn't actually do it, though. They underwhelmed the market with their size of the stimulus program. These suicide central bankers may just go for broke, DK. We obviously have more inflation than the government statistics are saying, but they may just go for broke and just go full helicopter money here. We are getting to the absolute perversions of the Ben Bernanke 2002 helicopter speech. We have central banks now, whether it's the Swiss Central Bank or the Bank of Japan, they are buying ETFs, lots of shares. The Swiss Central Bank owns $60 billion worth of U.S. stocks. The Swiss Central Bank even owns gold and silver stocks as a hedge. This is theater of the absurd, Twilight Zone, dystopia in reality right now.
If, as you are, you could continue on to just play that out, what you think, and nobody can predict the exact future, but if you could give us what you think are some couple of realistic collapse scenarios that seem the most realistic to you. And you mentioned such terms as helicopter money. If you could explain to people what that means, but also tell them what it would do to the individual homeowner, the individual family member.
Helicopter money would be nonstop, either liquidity injections or QE programs. They're probably going to change the name since the QE program, it's not polling very well, testing very well in their focus groups. So they're going to change the names, or they'll just go full backdoor liquidity programs like what I've been saying for years with these currency swaps. Jim Ricker is another expert. He says that there's been over $30 trillion in backdoor quantitative easing or currency swaps that have been injected into the global economy since 2008 to prevent banks from failing, to prevent the over-the-counter derivatives market from failing, to prop up asset prices and create new bubbles. What this means for the guy on Main Street is your savings, your purchasing power of your currency, the money in your bank account is at risk. If banks start going in the United States to negative interest rates, they're going to start charging you. It'll probably be a small percentage per year. They may go after your 401k as well at some point. I just read an article a couple days ago from another former government economist named Ken Rogoff. He's saying that the U.S. government should start issuing 50-year bonds because the interest rates are so low because central banks have manipulated them low. So I think what this means is it's going to be very tough to save. It's going to be very tough to retire. if you're doing it in fiat currency, if you're doing it with normal conventional investments. Even keeping cash at a bank now is dangerous in an era of negative interest rates on government bonds. And now private sector bank, like I said earlier in the interview, in Germany, doing negative interest rates on their customers, charging them to keep cash at the bank. So what we're seeing is larger holders of cash, either large banks or pension funds or institutions, look at renting warehouse space and paying for insurance and security to guard large warehouses of cash outside the banking system. This is just unbelievable, DK. I think what this means for the guy on Main Street, though, is they should open up a gold money account, first of all, because it's not a regular bank, so they probably are not going to do negative interest rates, and it's run by credible people who are involved in the company, like Eric Sprott and James Turk, and so many of the other people in the gold community. Peter Schiff just joined them recently, too, as well. And, you're going to have some diversification outside the financial system. The era of set it and forget it investing is pretty much done. Volatility in a lot of asset prices, for the most part, has been manipulated down to fool people into thinking that the economy is doing well because asset prices are so heavily manipulated up or down. Certain markets are cared about more than others, and certain markets are manipulated up, and certain markets are manipulated down. It's gotten fairly easy over the years to tell which ones that the people in power, either the plunge protection team or the exchange stabilization fund, want to protect. Look at the oil market, for instance. The oil market was about to go below 40, and then it just had a magical unicorn rally almost to $50 in the last week or two when things were about to get bad and the banks were going to have to start calling in loans. So for the guy on Main Street out there, it's really tough. There's a lot of minefields, a lot. You're basically walking through a minefield that the politicians and bureaucrats and central bankers have set up for you. And for real world consequences, in a perfect world for the central bank, for all these central bankers and all these politicians and all these bureaucrats, they could deal with this global debt problem over decades. I don't think the Western world, so the US and Europe and Western Europe and Japan and England, I don't think they're going to be allowed to do all this and go on with the same nonsense that they've been doing for decades anymore. I think a lot of their trading partners are totally fed up, and they've already started laying the foundation for the next system. China's RMB is going into the SDR in the next month or so. So that's going to be positive. That doesn't mean the dollar is going to collapse right away. It just means that less people are going to need to do dollars, to use dollars for trade, and less people are going to need to hold dollars for reserves. We are also seeing that China's issuing a debt-backed SDR bond, or they're starting to create some type of liquidity for that bond market. So they are laying the foundations for the next global financial system. There is going to be a global financial reset. I can't tell you if it's going to be 6 months, can't tell you if it's going to be a year or 2 or 5, but it's going to be in the near future. And I'd rather be early than late to this party and be prepared in that sense. But for your listeners out there, the one thing that I can tell you for sure that I'm the most confident in, besides the fact that politicians and central bankers will always try to inflict inflation and taxes, is that they will change the rules on you a lot. So people may think that one asset class is good to go. I've heard different podcasts say, oh, if I have rental properties in all these different states and all these different cities in the United States generating cash flow, I'm perfectly safe. Well, what happens if President Hillary Clinton or Emperor Hillary Clinton or Emperor Obama comes out and says that we're issuing countrywide rent control and we're freezing rents, and the rent owner, the evil greedy rent owner isn't allowed to raise the rents with this inflation and unemployment problem and things like that. So we don't know what the rules are going to be going forward. So I think some type of diversification is important, but it's going to be a very frustrating time for most people because of all the rules changes, because of all the manipulation in markets, because of the asset price inflation, because of all the bubbles that have been created. There are commercial real estate bubbles out there now in the U.S. I'll expand on that a little bit further. Okay, so we had Dodd-Frank, right, which is the attempt by Congress to put more rules in place for Wall Street banks after 2008. Well, one of the unintended rules of Dodd-Frank was they forced the banks to not give out as many loans to small business. And instead what happened was a lot of the loans by these the banks all over the United States was the loans started going into commercial real estate instead. So we had a bunch of extra projects that were funded with cheap capital that were not necessary because that was the only place the banks were really able to put the money after all the new regulations that were layered on. So we have a new bubble now in commercial real estate that's much larger than it was ever before. So there's all these new bubbles that have been added or reflated. It's just a dystopian type of scenario for your listeners out there. There are some bright spots out there. If you have a good small business, there is good stuff in technology, some good stuff that is actually making money and growing, but those are few and far between. So I think, the real economy, for the most part, all over the globe is there's going to be a major depression, at least for a while, until the people that are in power right now, they have power stripped from them. It is decentralized, and I think Keynesian economics needs to be removed.
If we could look at three groups of people really quickly, one would be young people getting out of college, entering the full-time work world, hopefully full-time, right? Another is people that are kind of in their mid-career, their full stride, raising a family, and the other would be people that are actually in retirement. If we could just take a quick glance at your best advice for each one of those three groups, given all those dynamics that you've just spent, the last time educating us on, what would each of those separate demographics be wise to be seriously looking at right now?
My first, I'm a big follower of James Altucher. He wrote a book about this. If your listeners want to go buy, it's called Choose Yourself. And he's built businesses, he's made millions of dollars, he's lost millions of dollars, he's come back from it still. The best advice I can give your listeners out there, choose yourself. So focus on adding skills. Even if you have part-time job or full-time job, don't trust that just because things are going well right now doesn't mean that the overall economy can't get much worse, and the boss could say, oh, well, we're still going to have to fire people even though you're doing the best job and you're a best employee, but you're making too much money at your job. So either you're going to take a pay cut, or either you're going to take a pay cut and we'll keep you on staff, or we're going to fire you. So I think people just need to focus in any of those demographics on continuing to educate themselves even after they've graduated university or master's degree. They need to focus on adding practical skills that they can either build a side business on for extra income to replace that income that's being stolen, siphoned off, transferred from politicians and central bankers through inflation and taxes, increasingly more inflation and taxes. They need to come up with either side businesses to start off with a part-time business with extra skills they've learned, or they can transition then to another business. And, if you're in any of those three demographics, you're going to need to do this in order to survive what is coming. It's just... from speaking with my grandmother before she passed away, she grew up in New York City during the 1929 Depression, and she lived in a small apartment with her mother, father, and 5 or 6 brothers or sisters, and they were adults, and everyone had jobs and everyone pitched in. It wasn't great, but they made do, and that was with deflation, with falling, contracting credit and prices. What we have now with stagflation is the worst of both worlds. So we have the economy not able to create enough high-paying full-time jobs, and we have your money not going near as far. So in that type of scenario, for families out there, they're going to have to join together and accept the fact that the economy is bad, that they're going to have to look for part-time jobs in order to replace lost income. I would not necessarily look for going to an employer for that, because I think going forward, I just read an article from Lawrence Kotlikoff, and he was talking about how Social Security ran a $6 trillion deficit in the last 12 months. That means his prescription, and he talks with the government economists at the Office of Management and Budget, and they said that most likely there's going to be a 32% increase in the Social Security payroll tax in the near future. So if you're earning a paycheck as an employee, your taxes are just going to increase more going forward. The Obamacare tax is going to go up in your premiums. It's going to be tough to survive only earning a paycheck as an employee. So my advice to all of those demographics is to be more entrepreneurial. Even if you're an employee, and go get a certification, go read books that you're passionate about, learn a skill, do something on the weekend where you can maybe earn some extra income or build a side business that eventually can build into a real business. And that's how you're going to replace the income that is lost, or rather more stolen, from politicians and central bankers going forward.
Anything special for current retirees who are seeing? We spoke with some family members who were able to rely in the past on certificates of deposit and that sort of thing for a steady source of income to supplant, Social Security or pensions. But with interest rates going to pretty much nothing, what can current retirees do to survive?
Sure, that's going to be very tough. Gold and silver stocks in the future. Obviously, gold and silver, the paper gold and silver market is very manipulated. There's always the possibility that in certain countries, mines can be nationalized. I don't think mines will be nationalized globally, unless, the globalists are able to go full one world government and full control. But, that's full dystopian, full totalitarian scenario. And, if you have that, your investments going bad are the least of your problems. But I would say that in 5 years, 10 years from now, as gold and silver prices people realize that gold and silver are manipulated. We're seeing a lot of billionaires now going to gold and silver that would never have bought gold and silver in the past. The gold and silver miners, if they can keep their costs down, because oil prices are still low, their margins are spectacular going forward. I think we will see some gold and silver miners go up 5 or 10-fold easily in the next 10 years or so, easily. But I think we will see very large dividends from gold and silver miners if they can keep their costs down pretty good. What I have also heard, DK, from talking with some gold and silver companies is they actually have contingency plans in case there's really bad inflation, because shareholders have brought this up in the past. And I think some gold and silver companies, if inflation does get worse, you are going to see gold and silver you are going to see dividends paid out in physical gold and silver. And some companies either will ship you the metal, or you will have your gold money account and they will just credit your dividends there. And you can either have your gold or silver stored in a different vault in a different country, or you can take immediate demand of it. Other than that, there's not a lot of easy sources for income. There are some rental property options, but the problem is rental property in scenario, normally rental properties have to do well if there's job growth in a local market, because real estate is local. And there's a lot of things that the politicians can play with taxes. You may be able to pass some of the taxes onto your renters, but if there is rent controls established, rental properties wouldn't be nearly as attractive. But rental properties, unless those things happen, they are going to be fairly attractive as a diversification tool. But I wouldn't put all my money into there. I wouldn't put all my money into physical gold and silver stored either at your house or in just one vault. You need diversification of your physical gold and silver into multiple areas. And I think the gold and silver stocks are in a bull market, and they are going to do amazingly going forward, unless there's mine nationalizations all over the globe. I just don't see that right now, but my opinion can change on that going forward.
Now, you didn't mention, or I missed it, talking about direct seizures of assets. You mentioned potential nationalization of mines, but what about bail-ins of accounts that have value at the individual level, whether it's MyRAs or bonds or savings accounts or pensions or anything like that?
I don't think that they want to do that immediately. I think their goal is to milk the cow increasingly more. What's the analogy there about the frog in the pot if you just slowly raise the temperature? I think that's the goal. So what they would do if they do anything like that, and I think that will happen in the next 10 years, is I think at first it will be for national security reasons, DK, you have to put 1% of all of your 401k or IRA into 50-year government bonds or 100-year government bonds, which basically allows the government then to totally inflate away the value of all your purchasing power and savings and totally destroy the value of that investment. So I think that's going to be the goal, and I think they're going to ratchet it up slowly. If they go for total confiscation right away, that will bring out the pitchforks. And normally, they can keep more brainwashed people asleep by doing it slowly, in steps. So, okay, 1% wealth confiscation tax on this, 2% increase on your property taxes, 5% increase on your food tax when you go out to eat. They can steal more of your wealth that way, redistribute more of your wealth that way, slowly at a time, milking you slowly rather than just taking the whole thing. If they do it in steps like that, then most people won't even notice for the most part, at least not for a while, and that will prevent the pitchforks from coming out like what almost happened in 2008 when things were on the brink.
Well, Jason, is there anything else that you can think of that I haven't asked you about where a collapse hits home that comes to mind from your work on Wall Street for Main Street?
No, I think that pretty much covers it. I'm just really frustrated with the politicians in the United States and so many other countries. I'm frustrated with the bureaucrats. I'm frustrated with the people on Wall Street who just want to see the government make excuses or make phony government data. I'm frustrated with a lot of things. So, I'm sure there's a lot of people that share my sentiment out there. The best thing you can do, though, is keep learning more and keep challenging yourself. And don't trust any one expert. Go check other people's research and facts. What we have coming is going to be so complicated, and it's going to be constantly changing so much because the rules are going to change so much. Like I said, rule number one is politicians are going to change the rules. There are lots and lots of lawyers in Brussels, for our European listeners, and also in Washington, D.C. They are going to change lots of the rules, and it is going to be very frustrating for people. Obviously, I wish things were happier and more positive. People can still affect positive change at the local level for your family and friends on Main Street. You can slowly wake people up or get them to prepare or change. But at the national level, at the global level, I just don't see these things happening. I see things getting worse, unfortunately, before they get better.
Well, you've certainly given us some strategies to go on. If people are going to have to listen to this one, I think, a couple of times because you are just, a fire hose of facts and information and a lot of wisdom there. So thank you very much, Jason Burack, for giving us so many of your insights here and for joining us again on Reluctant Preppers.
You're welcome, and keep up the great work. I think the stuff you are putting out, the content, is very thought-provoking in terms of how much it's different from a lot of other channels.
Great. Well, we hope to keep doing that up, and we do pay attention to comments and that are listed on their videos. I know that when we've interviewed you, you've been able to reply to some of the people's specific comments, those who are specifically serious in their, seeking more information or clarification, that kind of thing. So just love to have you back another time.